Local families should be concerned. Reagan.
Chris, the Dow Jones Industrial Average dropped more than 800 points today. I spoke with a local professor of economics who tells me the pandemic sent stocks soaring over the past 4 years, and now the economy appears to be correcting itself. He tells us this may be a good thing for consumers. However, their investments may pay the price.
Friday's report from the U.S. Labor Department highlights growing fears of a potential recession as stocks take a roller coaster ride after the opening bell. Specifically, U.S. job growth fell well below expectations in July, and the unemployment rate ticked higher, fueling fears of a broader economic slowdown. Western Mass News spoke with John Rogers, professor of economics at American International College in Springfield. He tells us it's not time to sound the alarm just yet, explaining that the economy is adjusting itself and starting to unwind some inflation. But he says the downside is less economic activity and more unemployment. And when we start to see stock prices drop, especially impacting tech companies, it can cause anxiety.
This is concerning because, first of all, people are losing money. There are going to be a lot of layoffs in those companies that are having trouble. And we've kind of bet on the chip revival in this country. And so it's sort of disturbing to see a company like that struggling with its stock price, because that means it's going to have less money to invest.
However, he explains that the economy is in the process of correcting itself, which Rogers says was inevitable. And he describes the underlying U.S. economy as robust, which is why he does not see a recession or a crash in our future. Instead, he predicts what he calls a rolling recession, which will hit certain sectors of the market at a time. As for us at home, Rogers says the direct impact at the moment probably isn't going to be very significant, but it's important to keep an eye on your 401k.
People shouldn't panic and say, hey, I want to get out of the stock market in my 401k or my long-term savings. These things go through cycles, and if you stick with it, you'll come out and be fine.
The bright side is prices for consumers are going down. However, that's also not happening as fast as many would hope, since costs have steadily gone up for the last 4 years, and we found many shoppers in Western Mass are feeling the effects.
Growing up, going with my parents shopping, it was definitely different back then than what it is now.
And for many struggling with student loans as well as buying groceries, it may sway their decision come Election Day.
Tons of interest, definitely going up as we speak. Now, like, I'm 18 and I'm legal to vote, I feel like I have more of a say for my choice. I'm definitely voting red. I definitely think with a Republican in office, things will become more steady and the economy will go back to kind of the lowest rates that we had when a Republican was in office.
However, Professor Rogers has a different perspective regarding the Republican message that the economy was better under President Trump.
Really, in a way, you can see because of inflation, obviously that's affected people and people have suffered from that. But if you look at the overall economy, the growth of the economy, the level of unemployment is low, the stock market's been high, the dollar is strong. So you can't really say the U.S. economy is in any kind of trouble.
One thing to keep in mind, the stock market is a reflection of the economy, but also it's a reflection of expectations and uncertainty in the world, like conflicts overseas. When it comes to retirement funds like your 401k, Rogers advises that the older population cut back on risk. However, younger investors can't afford the risk, and he says it will actually benefit them in the long run. Reporting live in the studio, Reagan Locre for Western Mass News.
Reagan, thank you for that live report. For more than a week now,